Hello, everybody, and welcome back to a brand new series of Talking Points. So, we're doing things a little bit different this time. And the way we're working is if you are subscribed to the Wealth Masters Club, you will be receiving the Times articles every week on a Friday. And each Friday, we are focusing on a different field within business, tax, and investment. And we're working with experts in their field who will give us their expert opinion every week. So every Wednesday, which it is today, we will be sharing a video with a live interview chat with that person who is the expert of the week. And we'll chat a little bit more about the article and get a little bit more in-depth understanding of their knowledge and where we are in the current market. So please feel free to share your comments and opinions in the chat box below. We welcome everyone's communication and we'll try and get to as many people as possible. But without any further ado, I'd like to welcome our guest for this week, Mr. Johannes Maree, who is the CEO of the Destinata Group. Johannes, thank you so much for taking the time to join us today.
No, Damien, brilliant. Good to be here.
Great stuff. So, Johannes, last week you wrote an article which was focusing on your opinions and outlook for the year 22 based on business and what you think is going to happen. And given that we're still in the midst of a global pandemic, you were still rather optimistic about what was happening in the future. So which factors exactly are you focusing on that you feel will give us a positive turn in the next year?
Okay. So there's a couple of macroeconomic things that I've looked at. I've looked a little bit at the history. And then there's also a couple of factors in our local economy that I've kept quite a close eye on over the last couple of years, ever since COVID hit us. So I think just to start off on a global scale. Now, first up, I'd just like to say I'm not a doctor, but I base my opinion on what I read and what I get out of discussions with people who I trust. So from what I've read in the media, if we look at past pandemics, let's look at the Spanish flu pandemic in 1918, for example. That lasted at about 2 years. I've read other articles by scientists who have said that typically a pandemic lasts about 2.5 years before it goes from being a pandemic to endemic. Now, endemic is something that's around, but it's not, it's like colds and flu. It's not something that is killing people left, right, center like COVID was doing. So that for me is quite an important factor. And then another thing that strengthens that opinion for me is the fact that when we had our fourth wave in December, typically with the previous 3 waves, where you had a spike in the number of infections, you also had a spike in the number of hospitalizations and deaths. And that was a recurring trend. What happened in the fourth wave was that we had the spike in infections, but the deaths and hospitalization rate still remained fairly consistent. Now that strokes a lot with what the world has also been saying with regards to Omicron, which is now the main variant worldwide, is that it's highly contagious, but it's a lot less deadly and a lot less severe. So the number of hospitalizations, serious illness and death is a lot lower. And that strikes with what I said earlier about it becoming more of an endemic virus than a pandemic. I can just from my logic and how I've debated this with myself, it makes sense for the virus to be very contagious, yes, because it wants to survive. But in line with that, then, because it wants to survive, it does not want to kill its host, because if it kills the host, then the virus dies as well. So, I mean, utopia for a virus is if he can spread, but he doesn't affect his host too badly. And it looks to me that is where things are going. But that's my personal opinion. Like I say, I'm not a doctor, but I think there's been quite a few signs pointing in that direction. Okay, so that's the one thing. I think then the other thing is the world's reaction to the pandemic. I think we've learned a lot over the last 2 years. I think the the days of knee-jerk reactions for every new thing is likely over. I think the world has now learned that travel restrictions are fairly ineffective to curb the spread. I think they've also taken the viewpoint now, or most governments, that having too severe lockdowns damages the economy too badly. So, for example, in South Africa now, the latest lockdown, or not lockdown, sorry, I mean self-isolation rules. Apparently now, if you are COVID positive, if you do not show any symptoms, you do not have to self-isolate. If you do show symptoms, you need to isolate for 7 days. So, I mean, that's a lot less stringent than what it was in the past. The other thing is just how quickly, yes, the world did have a knee-jerk reaction to when Omicron was first discovered. But if we look at the time frame that passed for most of the travel bans to be lifted again versus in the previous year, I mean, it was fairly quickly. Omicron news broke around about the end of November, and by the end of December, we were off most of the red lists. So I think the world has learned that we're not going to contain the virus through rigorous lockdowns and, you know, travel bans and things like that. So that's obviously a very big positive for me. And then lastly, I think just the human spirit. I think people are over it. When I move around in my surroundings, I see more people at malls. I see more people at events. I can physically see the economy circulating more and being more active. You can see building works happening. So from that point of view, I believe we are over the hump. That's my personal opinion, and that strokes with me also with what we've seen in history. Like, for example, this the Spanish flu pandemic that we had in 1918, which followed kind of the same timeline as this one.
Great stuff. Well, let's hope we continue on the positive trajectory, because I think a lot of businesses are quite in dire need of the economy to start stimulating itself again and get going. But one of the quotes that you used in your article, which you use quite often, is from Warren Buffett, which says, "Be fearful when others are greedy, and be greedy when others are fearful," which is quite a strong quote. But now, how have you incorporated this into your business strategy for the next couple of months or years?
Number one, yes, just on the quote itself, it is a bold quote, but that's why it's so important to look where that quote comes from. I mean, we all know who Warren Buffett is. He is the most successful investor in history. So I tend to listen to guys who have been very successful at what they do and take on board. From a practical point of view, there's two ways of looking at investments. It's either technical or fundamental. Now, a technical analyst is somebody who typically more trades rather than long-term invest. So, for example, if you're a technical trader, last year could have been very exciting for you because the all-share index went up by something like 31% last year, the JSE all-share index. But that's market sentiment. And I believe that came because people saw that obviously right after COVID started in 2020, you know, they were very down about the prospects. And then in 2021, I think they realized that, okay, no, there are still possibilities, and it was not as bad as expected, and also as the lockdowns eased down a little bit. But I mean, I'm fairly certain that if you take the majority of the companies on that make up the shares on the JSE, their balance sheets didn't become 31% stronger over the last year. It was driven by market sentiment. So that for me is a short-term thing. I like fundamentals, and that's why I say be fearful when others are greedy, and greedy when others are fearful. If the fundamentals make sense, that's for me the first thing that I look at. If the fundamentals make sense, but the market is negative about it. The market is negative, you know, because of what they read in the media and what's happening in the short term. if the long-term fundamentals are good, that means fundamentals are good, technical might not look so good. That means the price is lower, which means I can purchase a fundamentally strong asset at a below real value price. And that's the key thing for me. I mean, Warren Buffett, when the house price crash came in 2008 in the USA, he went major into residential property. And I mean, that's a clear-cut example of exactly that. And I mean, he's made a ton of money because of that.
Absolutely. Now, you spoke a little bit about the fundamentals, but in your article, you also say that we should invest, or we as investors or business people should invest in assets where we believe in the fundamentals thereof. So could you just explain this in a little bit more detail, what you meant there?
Okay, yes. So let's look at a couple of examples. The fundamentals of a business for me is, you know, what need of a human being does it satisfy? So will there be a demand, and what is the supply? And you're looking for that balance there. You know, if the demand is high and the supply is low, that's a good business. If the supply is high but the demand is low, that's a business you do not want to be involved in. So fundamentally, let's look at something like Spotify and Deezer, the streaming services, versus Musica, where you can buy CDs, and also something like a video rental store where you could rent DVDs. I don't even know whether they exist anymore, for example. So that for me is something that's fundamental. I'll go and look at the streaming service. Where is the world going? The world is going cloud-based. There's a massive demand for streaming services. It's easier to use. It's cheaper. It's easy access. I mean, everybody can access it on a smartphone. There's very limited effort required from the user. It's a click of a button. So, I mean, it's plus you also look at the target market. The target market is the new generation. So fundamentally, companies like Spotify and Deezer will definitely move forward, and companies like Mr. Video and Musica, I mean, if they're not already gone, they have to be on their last legs, because the fundamentals aren't right anymore. Things have changed, and they are not on. They're not on the right playing field. They're playing a sport that nobody's interested in anymore, and that's the fundamental thing for me.
Great stuff. And then you also highlighted the fact that one should never overexpose yourself, which I guess in a business sense means don't bite off more than you could chew. So how would you advise business owners to prevent this from happening in their business setting?
Okay, so number one, like I said, I always believe you should be in a business where the fundamentals are strong. However, strong fundamentals, in my view, pretty much guarantees long-term success. But you have to make provision for short-term ups and downs. I mean, let's look at the short letting markets over the last 2 years. I know quite a bit about it because I'm quite closely involved with it. At Destinata Capital, we've also got a stake in an Airbnb management company, so I've got access to the data at ground level from the guys that are in the trenches. So I'm quite up to speed with what's happening there. So, obviously, I mean, in the last 2 years, yields clearly were down on that because people weren't allowed to travel, and there was a lot of fear in the market. But let's look at the Cape Town property market, for example. What are the fundamentals that drive it? Number one, it's one of the most famous cities in the world. It's one of the favorite tourist destinations. It's got one of the 8 wonders of the world, being Table Mountain. It's cheap for tourists to come here because of the weak rand. And it's an absolutely beautiful city. And also number 5, is except for the foreigners, you've got this constant migration coming in from the northern parts of the country, especially now where we've moved into the era where Zoom meetings like we're doing now have become more common. A lot of people are now wanting the lifestyle that the Western Cape can offer you, and a lot of them can actually now do their work from their study or from a coffee shop or from wherever. And that's also, in my view, fueled this immigration that's going towards the coastal towns now. So that's lifting the market. But when it comes to buffering yourself for any short-term downsides, things happen in the short term. Things like a COVID pandemic. Make sure that you have enough cash reserves available so that if there is a time when your yields are lower, that you can supplement it to carry you through that phase. Because what happens if you don't do that? Even if your fundamentals are right, you're going to run into trouble because you won't be able to cover your short-term cash requirements. I mean, you might run into trouble with the bank if the property is financed, for example. And exactly, that is when the thing comes up that I mentioned earlier about, being greedy in fearful times. If I didn't make provision for the short term, I know the market will be covered because the fundamentals are right, but I haven't now made provision in the short term. I run into trouble. Property gets repossessed. A guy like Warren Buffett, who also believes in the fundamentals, but who has made the right provision, he comes and buys that property from me at below market value because I didn't plan ahead enough. And it's like that with any business. You need, each person in whichever industry they are, need to know what the risks of that business is. You need to know your industry well, and you need to make sure that you are covered for it. It's easy as that. It could be something simple like if you are in a manufacturing concern, a machine breakage, for example, that could cost you a week's worth of productivity. What I would think then is it's very important that you've got a type of insurance that doesn't only cover the repair of that machine, but that also covers you for the loss of income for that period while that machine is on downtime, for example, because that typically is a short-term thing that can sink you. So it's very important for me to be prepared in that sense, because otherwise, if you don't do that and you fall victim to what's happening in the short term, you miss out on the long-term benefits of an asset or a business where the fundamentals are right.
Now, Johannes, in terms of your economic outlook for the year, which industries do you feel, and obviously this is personal opinion, which industries do you feel will be seen as a stronger growing industry versus the years before?
Okay. First of all, I think tourism and hospitality will pick up significantly again. I'm already seeing it in our numbers that I see on a regular basis. I think the Cape Town and Cape Winelands property market is also going to be driven because we have more foreigners coming in, driving that market again, and also this immigration that I mentioned earlier. Another interesting one that I think is going to grow quite significantly over the short to medium term, in my opinion, is private equity. Recently, I'm not quite sure whether that legislation has passed yet, but recently, the rules governing pension funds have been changed or is about to be changed. In the past, they were allowed only to put 5% of the capital towards private equity or to venture capital. That's been increased now to 10%. So there's a larger chunk of pension fund capital that will now potentially be going into that industry. So I mean, that's essentially double that industry. And I think government has also taken notice of the private equity industry, partly because of Section 12J that we've had for the last few years. I think there's been many success stories from very successful businesses that have come about from that. And Damien, as you and I know, a country's economy is driven by the SME market. And typically, I mean, how do you finance the SME market? through banks and private equity, and that's the way to do it. So those are the main industries, in my opinion, that I see a lot of growth coming in. But obviously, I've also specialized in certain industries, so there might be other industries that are also on the brink of making massive breakthroughs that I may not be aware of. But I think those couple that I mentioned now, we are in for, on the short term and the medium term, for some nice growth.
It sounds good. And now, Johannes, do you have any closing advice for young entrepreneurs who may have been a little bit cautious to start a new business over the last 2 years and might feel like, okay, now's the right time to get started? We've seen there's an uptick in economy. We've seen that people are starting to, crawl out of their shells. What sort of advice could you give for those guys?
Okay, now that's actually a very cool question, because it's so important. No matter what the macro economy is doing, make sure that you do your homework very well. Take calculated risks. I'll expand on that just now. But do your homework very well. Make sure that you research what you're going to do extremely well. Make sure you are targeting the right market. Make sure there is a market. Look at your competitors if there are. Look at your costing. Look at your forecasts, and be realistic. Don't build pie in the sky type of forecast. Be absolutely realistic, so that you know, so that you've got a fairly clear picture of what's going forward based on the assumptions that you've put in. But through your research, make sure that your assumptions are, to the best of your ability, realistic and fairly accurate. And then you have to go and look at the risks, manage your risks. I mentioned now a little bit earlier, short-term things that can creep in. Obviously, a startup is more risky, and a lot of them do fail. But do your homework as best as you can. Because if you're prepared, then you can roll with the punches. If you're not prepared, that's when you get that sucker punch, which you're not prepared for, and that's when you fail very, very quickly. So I'm sounding like a vastgehaakte plot, if I can use the Afrikaans. But do your homework. Make sure you know your industry. Make sure you know the ins and the outs of what's going to go into the business. What's your expected revenue streams? Get your costing as close to 100% right. Speak to people in the industry. Make sure that when you take that leap, that the capital that you're going to put into that, because it's often for startups, it's capital that's coming from friends and family, so you really don't want to burn that. Make sure that it's going into a solid plan that has been researched properly, and that's key for me.
Fantastic. That's very valuable advice. Johannes, thank you so much for your time. We really appreciate it, and we hope to catch up with you very soon again.
Damien, thanks, man. Always a pleasure.
Great. Now, for everyone watching at home, don't forget to share your thoughts and opinions in the comments section below. And if you want to keep up to speed with what's happening in the world of investment, tax, business, then visit the Wealth Masters Club page and watch one of our online trainings. We've got some great content on YouTube, so make sure you subscribe there as well. And we will keep you posted with fantastic news, great offers, and some very exciting things in the future. But for now, cheers. We'll see you soon next week.